Bank of Japan keeps interest rates steady, but signals that another rate hike may not be far away. Welcome to Market Insight, I'm Thomas Warner. Japan's short-term interest rate will stay unchanged at 0.25%, at least until the bank's next meeting in October. Policymakers in the meantime will be keeping a close eye on what they call improving domestic conditions. So are they improving quickly enough to make an October raise a realistic possibility? With me to give her take is Min-Ju Kang, ING Senior Economist for South Korea and Japan. No hike today, Min-Ju. Consensus appears to be December rather than October. What do you think?
Actually, having listened to the governor with comments at the press conference, and also read the statement carefully, we believe that the BoJ has little reason to rush to raise hikes further. However, certainly at the current FX level, their option for policy normalization is still open. After the meeting, at the press conference, the UEDA reiterated that the BoJ will remain data dependent in its policy decision, and actually the recent data development is quite in line with the BoJ's outlook. Having said that, we believe that the October inflation number is quite important, because the Governor Ueda also mentioned that he has a strong interest in October service prices. Actually, October is the typical month that the companies raise their prices for the second half of the year. So it is very important to look at the number changes to gauging the timing of the BoJ rate hike.
And do you think we're more likely to get a surprise to the upside in terms of inflation, or more to the downside based on your understanding of the Japanese economy?
Actually, given the recent solid wage growth in Japan, for example, the real wage growth recorded a second monthly rise. And also, we believe that the companies has more power to reflect the input price changes into their final price tag. So we believe that there is more upside risk on the October inflation rate will rise.
So Min-Ju, you listened to Governor Ueda's press conference there. Did you get the sense that the Fed's bumper cut this week had any effect on the BoJ's decision making?
Actually, it was very interesting that the BoJ Governor Ueda mentioned about the U.S. economy, and the uncertainty over the U.S. economy is a factor to consider in BoJ's policy decision. So we believe that the Fed's efforts to avoid a recession by making large cuts should be welcomed by the BoJ.
Moving on to the currency now, it's been making headlines throughout most of this year. Do you think that the potential convergence between Japanese and other markets as monetary policy is going to put some strength back into the yen?
Yes, actually, we believe that the yield gap difference will narrow. Maybe it was mostly driven by the Fed, not by the BoJ. However, it will eventually put some more pressures off from the strong dollar. Then we believe that JPY's appreciation in coming months.
Now, zooming out slightly, looking at the political aspect, and the Liberal Democratic Party is going to be wrapping up a leadership election in just a week's time now, and Japan is essentially going to have a new prime minister. So how much influence do you think that could have on the bank's timing, do you think?
We believe that the BoJ is quite independent from the politics. However, it is the BoJ might think that it is a factor of uncertainty, because new LDP leader policy stance can have some impact on the economy, but now there are three strong candidates, but their policy on fiscal are quite different. So depending on the result, that impact on the economy should be different. So in that case, the BoJ's reaction could be changed.
Just one final question from me before I let you go, Min-Ju. Do you think that there's anything that investors or people looking at the markets have failed to understand about what's happening in Japan that you think they might like to be aware of?
In my opinion, the market's overview on BoJ is quite conservative. So, for example, looking at their terminal rate for this rate hike cycle, we believe that it could approach to 1% level. However, the market consensus for now is around 0.75%. We believe that this cyclical recovery of the Japan's economy could lift the policy rates this time to touch the 1% of policy rate.
All right, we'll leave it there. Minju Kang from ING, many thanks for your thoughts today. And that is Market Insight. Don't forget that you can watch more videos on Reuters.com.